Good morning, everybody. It is Black Friday. Everybody seems to be in a turkey coma right now, from what I can tell in the chat room. And we're going to talk about what has become the biggest trend in investing in the world. And I don't even know that it's arguable, but we're going to see an interesting infographic about 10, 15 minutes in that will convince you that if you haven't really put climate change and sustainable investing on your radar, you should at least get it on your radar and realize that the big money is ahead of you right now. So the institutional and big money investors and the big corporations are already headed in this direction. So no amount of ideology or political arguments should really even play into this anymore. It's just a giant trend that we should be aware of. If you go to Google or your favorite search engine, I don't know what other ones even exist anymore, type in climate change, and you will get an amazing assortment of websites and articles that pop up. NASA is the top one that pops up. Intergovernmental Panel on Climate Change, globalchange.gov, the UN, some papers, Wikipedia, World Wildlife Organization, scientific organizations, the World Bank, right? Physician, just write down the list. You cannot get away from this. So the question I think that folks should ask, if you are hanging on to being a climate change denier, is why? Why is that important to you? If you're an investor, is it making money what's important to you? So if the giant trend is in the direction where the big investment firms, right? Allianz and Schrader's are advertising. All these other organizations and corporations. BP, if you go to any corporate website, they have a sustainability page now. When you see the oil majors getting into this, you have to ask yourself a question: why is that happening? So the pressure on the government to take more actions on climate change is ramping up faster than we can keep up. Just a couple days ago in Brussels, more pressure from the MEPs to make climate change a primary thing that the EU is involved with. It was more than a 2-to-1 vote. So not only was it a Paris Agreement that 197, 98 countries have signed on to, and eventually the United States will probably sign on again, but you have other governments. And what is one of the things that we take a look at? We take a look at the big secular macro trends. This is a big secular macro trend. And we take a look at the trends in government and central banks. I don't know that central banks have much role right now, but as I've said, down the road, they could, because if there's a helicopter money endeavor for a Green New Deal or something like that, central banks become involved in printing the money, making the money available. Brussels, the EU, they're going to get on board in a very, very heavy-duty way. You're going to see their demand for fossil fuels drop significantly. It's already happening. Even over here in the United States, and I've brought this up, some of the coastal towns having a bit of a ideological debate here. Miami Republicans are at odds with the Trump administration on climate change. Why? Because down in, and I was just there, in the Keys and in Florida, other places in Florida, in Miami, you're seeing the impact of rising sea levels and more vicious storms. This isn't just weather. This isn't just a sunspot. This isn't some huge natural thing that just happens once in a while. These are measurable events that people are starting to say, hey, A plus B got me to C. 1 plus 2 got me to 3. And they're understanding this because they're taking it from a mathematical standpoint. And the math and the science are pretty clear to the point where Republicans are saying, hey, we need to put the ideology aside and just say, okay, what is going on? I recently wrote an article about the peak oil plateau being just about here. And if you took a look at the comments, you go down here and you can just read, you don't even have to read the article. Read the comments and find out what is going on really. There's a lot of people who deny that this should be an investment theme. And that's wrong. Notice that the article is getting plenty of likes. So, but a lot of people are just skewering me, saying that to consider fossil fuel demand going down in the near future, in the near term, is somehow purely ideological on my part. Well, I would point out that's probably not true. We are at what's called the coal cost crossover. We've talked about this for a year now, give or take, because we're seeing coal-fired power plants being torn down and being replaced with alternative energy resources. That is not from zero. That's not saying, hey, I need extra energy demand. What should I build? Now, we know the answer to that question too. In the United States and around the world, we are starting to see coal-fired power plants torn down. They already exist and replaced. Think about the expense. So these utilities are looking and saying, okay, it is cheaper for us in the long run to tear down our coal-fired power plant today, spend a bunch of money to replace it, because over a decade, we're going to save money. That's exactly what's happening. And in fact, where'd my article go? There you go. Coal demand is already falling. Not just in the United States, where it's falling off a cliff, but everywhere in the world. So when people talk about, and they throw out a talking point and say, well, India and China just keep on building coal-fired power plants, they're replacing some, there's no doubt. And there are some scheduled if they can't find an alternative. But the reality is that demand for coal globally is falling. And as soon as China and India get fully on board with that, which seems, according to their laws that they've passed, seems imminent, you're going to see coal completely fall off a cliff. So what would be near behind? That'd be oil. Oil's near behind. And gas, I think, is going to be on the peak plateau longer. But there's no massive upsurge in natural gas use either. It'll simply remain what it's become, which is a bridge fuel to the alternative world, alternative energy world. Alternative world would probably be something that climate change deniers say about folks who think that this is reality. So we have the fact that alternative energies are as cheap as coal and natural gas at this point. Demand for coal is falling. And that's really a harbinger for the rest of fossil fuels. And it's because utilities realize that, hey, it's cheaper for us to do this. Utility scale solar. Utility sales solar is growing faster than any other source of energy. And granted, that's from a small number, but there's an awful lot of power plants to replace. So you can read articles like this all over the place. This is on a utility website. Remember when I've talked about doing research that you want to read the industry trade publications? This is the sort of thing that you should read. And these other ones are good too. So if we need utility scale build outs, right? If there's going to be utility scale build outs of solar, what else is necessary? Batteries. This is probably out of place here, but we know that electric vehicles are coming. The Electric Power Research Institute is starting to coordinate guidelines on that so that all the chargers work with all the cars eventually. Energy storage. I can't make it to this, but if anybody can, in Dusseldorf. Why is that location interesting last year? What do you know about Dusseldorf and the surrounding area? What is it known for? What industry? Cars, damn right, cars. So why would they drop this right in the middle of the car world, right? It's because it's all changing. Graphene could become important. This is an interesting website, study to research. Energy storage news. I encourage you to read this. I've talked about why lithium isn't going to be the grid level storage solution. They point in other directions here too. Remember, lithium, because of the way it charges and discharges and how long it lasts, is very good with smaller devices. And cars are the ones where it's kind of like, which way do you go, right? That's the what should kind of battery should be here. Because bigger than a car, a stationary item, granted, we're selling lithium batteries right now for the grid. That's not going to last very long. They're expensive, they're toxic, and because they don't move, they don't need to be quite that compact. We can find other solutions that are cheaper and less toxic or non-toxic. And we've talked about those. It's really the car that is the battleground. What should be in a car? Should it be lithium? And it looks like there will be lithium for a while, but the amount will go down and down and down. And the other parts of the battery won't necessarily be as toxic. Cobalt, for example, might go away. So what does that lead to? If the utilities are building solar power and using batteries, what's next? The smart grid. So study the industries, you understand the industries, and then you get to the companies and you go, okay, which company is going to make sense? The contractors are preparing for this. So what company what two companies do we like that I talk about contractors all the time? Right? SunPower and Enphase make a lot of sense with contractors. This is the Bloomberg New Energy blog. I would encourage you to read this. A very balanced viewpoint on things. EIA, they're all over renewable energy. And even though I think this agency has been politicized recently, a lot of the material is still up here. They don't promote it too much, but it's mainly been left there. Energy.gov, right? The Department of Energy, whole clean energy section, right? This is real. The governments are pushing this agenda. Certain governments harder than others, certain politicians harder than others. The Yale website, they are reporting right now that climate change math just keeps getting worse and worse, which means that the policy responses will probably get stronger. Think that through. The policy responses will probably get stronger. That's important to know as an investor. Global Energy and CO2 Status Report by the International Energy Agency. And then let's talk about investing. Let's go to this infographic first. So sustainable investing, let's debunk some of the myths. This is from Visual Capitalists. They do a good job on this stuff. Remember earlier I said the institutions were ahead of the public. In 2018, sustainable assets totaled $12 trillion. I think a lot of that is inadvertent, but that's roughly a quarter of the invested money, 47 trillion. It's a huge increase over 2016. And I would caution you here, right? There's lies, there's damn lies, and there's statistics. A lot of this has to do with the recategorization of ETFs and what people are calling certain things. So a lot of this money that's invested in sustainable investing just has to do with the way things are defined, not necessarily that money has moved. Does that make sense to folks? If something wasn't defined as a sustainable investment before, but it is now, and it becomes generally accepted, suddenly there's more money in the category. Now, no doubt this is growing organically. Is it quite this big yet? Probably not. A lot of this is just changing of definitions. But take a look at the search engine results. More and more people looking, what is ESG investing? Well, because this is in the news more and investment firms are talking about it, right? We showed the ads from Allianz and Schrader's, and Invesco is out there too. People say, well, what does that mean? Investing is one of the most searched terms on the internet. So somebody throws ESG in front of it and people are like, whoa, what does that mean? Is that exciting? Is that good for me? So the interest has gone up. As interest goes up, more people become sold on the idea, right? Sales is just a numbers game. 100 suspects, 10 prospects, 3 sales. That was always the thing in the insurance industry. So what is it? Environmental, social, and governance. Now, I focus on the environmental. These things are very subjective. So it's difficult to measure social impact and governance, but it's pretty easy to measure what a company is doing with their products and services to impact the environment. So I focus here. Generally, companies that have a focus here do all right over here. Governance, we've had these talks about boards of directors being very into compensating the boards of directors and C-level executives. I think a lot of governance is lip service. Hopefully that changes. Hopefully corporations get run a little bit more ethically than they have been for the last 30 or 40 years. Now, this is where this is important to you as an investor. Institutional investors are the ones embracing sustainable investing. We've talked about how the big guys always get in ahead of the little guys. That's what's going on right now. The big guys are buying into this idea because they see that that's where the money can be made. So right now, with alternative energy and smart grid and all these types of investments being less popular among investors, the big guys are buying in. At some point, there will be a rally, and then all the chasers come, and you get that spike. Is that a few years down the road? Probably. But it's something that we want our money spiked, right? We want to be in before the spike. We don't want to buy in at the tail end. So only 20% of surveyed investors have been recommended a sustainability-based strategy, but of the people who have, 38% are extremely high interest. And my discussions with people put it at, basically 4 out of 5. 4 out of 5 people get this. And this is the direction that I've been moving my firm. After talking to some of my older Republican clients, they still like this idea. To them, it's not about politics. It's about leaving a better place to their kids and grandkids really at this point, and continuing to make money. So I'd encourage you, if the institutions are the ones investing here, do you want to be that far behind them? There's a myth that sustainable investment strategies underperform conventional strategies, and that was true, I think, until several years ago. Recently, though, it's not true. And I told you my brother works for Northern Trust. They have a sustainable index, and it beats the S&P 500 by a little bit. So stripping out the dirty companies now has been profitable. Now, a lot of that has to do with, right, take it in context, just like the changing of definitions. Take it in context, energy stocks have gotten crushed. So that means that a sustainable index, would have outperformed because the energy companies, the fossil fuel companies, weren't in there. But right now, they move pretty much in lockstep. There's very little difference anymore. So if you want to get rid of the dirty companies, you're not really giving up anything from a standpoint of performance. And you're probably reducing your risk profile. Now, people will say, well, whoa. Those other stocks, those alternative energy stocks are volatile. That's true, but they're growing. The fossil fuel stocks are either A, in terminal decline, meaning a lot of them will go out of business, or B, they have to transition their businesses, which is expensive. Which is why I've said that there's only around a dozen oil companies that I think are worth investing in out of however many are left, 70 or 80, whatever it is. I'm not including the super little ones. Myth 2 only involves screening out sin stocks. I think that this is the simplest way to do it. But they're trying to incorporate more factors. The problem with incorporating more factors is that it becomes harder to judge. So I stick with the environmental side. I'm screening out some of the sin stocks, and it's not even about screening out for me. It's just about what I want to include in my limited universe. As you know, our various short lists, there's only about 200 companies combined between sustainable growth and dividend growth and low volatility growth, or low volatility retiree dividends and alternative high income. We're only covering about 200 companies, but they've, for the most part, been meeting my sustainability screens, and I have to do another overlay to probably get rid of a few companies yet. And then we, of course, have the legacy fossil fuel stocks. So they get right into it. The screens do play a large part in it. See, and I'm not screening out casinos. You know why. Is this a fad? Now, an author on Seeking Alpha called sustainable investing a fad. I wrote a headline for an article basically calling that guy out, and I'll publish that soon. I don't normally call people out, but to think that sustainable investing is a fad, frankly, is idiotic. Now, my thought is that sustainable investing in the future, they're just going to call it investing. Right now, this is a transition period, and ultimately, most companies will probably abide or at least pay lip service to most of these concepts. How long will that take? Probably quite a while. Growth of self-identified sustainable funds has grown quite a bit. The number of investment firms, I wish they had on here. In Milwaukee, there was one firm saying that they're the only sustainable investing firm, but that's not true. There's several. And now I'm in the game, so there's quite a few out there. And they do it at different levels, screening out, including things. I'm focusing on the transition. So if you go to Blue Mount Asset Management's website, I focus on the transition because I think this is going to be a process. I think the oil stocks are about to have a rally. I've thought that for a while, but it's going to happen. And that will be the time for people who have legacy positions in Chevron or Exxon or other oil companies that aren't going to be able to make the transition to a cleaner energy world. That's when you sell. You sell into that strength. And I don't think that there's going to be a giant rally because I think a lot of people are going to be selling into that strength. So I focus on the companies that I think have a shot to transition or take part in M&A. Interest is confined to women and millennials. No, clearly they lead, but the institutions, right? The institutions are there. So if millennials and women are leading sustainable investing ideas, think about that from a demographic standpoint. Millennials are the biggest generation now, and women are half the population. So maybe a quarter of people out there aren't really into this theme. Maybe 30%, not many. Do you really want to row your boat against that tide? All right. And then sustainable investing only works for equities. Not true. There's all sorts of bonds now. So, and that is actually, I saw the article last week. I don't know if I saved it or not, but there's an article, I think it was in the Financial Times, could have been Bloomberg, I save a lot of those, but emerging markets sustainable debt has been a big deal. Why? We'll get into that in a second with one of these investments, but in the emerging world, they're not building out grids like we have in the United States and Western Europe. They are building much more localized electricity. Microgrids are being built, right? There's not this giant power plant that transmits to, a state. Little communities are being responsible for their own electricity in Africa, in Asia, right? India. So don't expect their grids to be the same as ours. They're going to leapfrog us in technology. Just like Southeast Asia did with cell phones. I know that everybody's happy with their emerging 5G services here in the United States, but if you go to South Korea or Japan, they're like, you guys don't have this yet? So we can look at we can get on board with the giant trend in almost everything. Real estate. You know, there's a couple of REITs that we talk about. I've talked about private equity. You know, for accredited investors, I have a couple of neat options there. So understand that this is all happening, and we want to be on this big trend. How much are the millennials into it? Do you ever go to Reddit? Reddit has a thread on solar. I'm telling you, this is a good freaking thread. Now, there's all kinds of people in here who don't know what they're talking about, and they throw out garbage comments. But some of the people who post here are industry people or contractors in particular, have been some of the good ones, research people. Some of these posts are outstanding, and they explain how things are happening and why they're happening. So if you're a Reddit person, jump on the solar. Now, we want to get into sustainable investing, but we have to understand that a lot of it is driven by China. A lot of investing is driven by China, one way or another. We know that the warning signs on China growth are flashing pretty bright right now. Will they be able to solve their problems? Sure. But will they have to do some extreme things? Will there be potholes? Probably. We already know that they've reduced their spending on developmental projects for alternative energy. And that is not likely to last very long, but they're trying to manage their money. So in the emerging markets, in just a couple of these countries, coal jumped. So there is some coal growth in pockets. That doesn't change the fact that coal use is dropping. And again, as I've pointed out, what if a Democrat wins the next presidential election? What if they put the screws to the coal industry again? What if they prevent any government fund from having anything to do with fossil fuel investment? What if they ban exporting coal? We banned exporting oil for decades. So keep in mind that there's a lot of risk to being a coal investor at this point. Most of the companies are going bankrupt left and right, and more are going. But the idea that some of these talking points that get thrown out that make people think that, oh, alternative energy is a bad idea, it's growing faster than any other industry on the planet. It's just a fact. You have growth rates from 20 to 40%. And this is growth that's going to last. It's going to be sustainable growth, right? Not, the double word usage here. It's sustainable, but it's also sustainable in the fact it's going to last a really long time. It's going to take 20 to 30 years to rebuild the electric grid in the United States and in the rest of the developed world. And then you have to build you have to electrify lots of places that don't have electricity now and bring them water. And one of these websites talked about that. It was right on the front page. There you go. Electric Power Research Institute. Water's on the front page. Water's been one of our themes, right? So let's take a look at some of the investments that are out there. All right. Let's just go to one of our main holdings here for this area. That's going to be the Invesco Solar Etf. It rallied for a better part of a year and has been consolidating downward. Let's look at a smaller chart. When these lines start to converge, it usually means there will be a breakout one way or the other. Breakout or breakdown. I think that we're in that area where you can start accumulating TAN, right? And if you're bullish on energy, I would say you don't want to own XOP anymore because not enough of the companies are worthwhile, right? There's only about a dozen companies in that ETF that we like. So instead, if you want oil stocks and gas stocks, buy a basket. I don't see a lot of hope for the gas stocks for a very long time. And we'll cover that soon too. I'm not adding to Antero, even though it's beat to heck. But what I'm looking to do is consider the Invesco Solar ETF technically is categorized as a technology fund. But reality is that it's energy. So you can almost say, okay, I'm going to have a little bit more energy exposure, but this is tech driven. At some point, this will be categorized as energy. Just understand, it's a transitionary period. The definition is going to change eventually. But you're going to want this in place of most oil and gas and other fossil fuels in the not too distant future. So I would tell you, start that transition now. If you take a look at the longer charts, right, they had that sell-off over the last several weeks. Money flow has pretty much bottomed out on the weekly chart. And on the monthly, it bottomed out a while ago. It's starting to come back. So you can use the short-term volatility to buy the down days. Like today, I don't think this would be a bad time to nibble in. Take a look at their holdings. Solar Edge, First Solar, Enphase, Sunrun, SunPower. These are all stocks that we talk about. Now, one of the companies that I'm not going to talk about too much, I'm not going to profile the stock, Atlantica Yield. But this really applies to several of the other yield companies. Think of the solar and alternative energy yield plays as the same way you think of an MLP. MLPs work when they can keep issuing new shares for new projects. And that's why MLPs got beat up, because people who understand that industry know that those dividends are finite. At some point, as usage of pipelines and midstream fossil fuel infrastructure is being used, the tolls will drop. So a lot of the return in MLPs was the issuance of new shares for new projects. Then people chase the shares, and you get new dividend investors in there, new yield chasers in there. The yield companies here are going to be similar. You should not think of them as growth vehicles. When you take a look at their structures, which are fairly complicated, I was just looking at the Atlantica Yield setup. You know, they have to get new investment to create growth. And the reality is, you're trying to just figure out how much is dropping to the bottom line to be distributed. And the answer is, sometimes that number is not really going up without more debt being generated. So you have to be careful, because if leverage debt is going up at the same time that they're trying to tell you that their dividend or their yield is going up, you have to ask the question, at what point does the music stop here? So I'm not terribly excited about these yield plays, not individually. You can use them as a way to get cash into your account so that you can buy other things, but you should not expect much total return above the dividend yield. To the extent that you get some, expect to give it back at some point. The real growth is in the companies that are taking part in the build out, supplying services or supplying product. Solar Edge and Enphase right? Your two big inverter companies. First Solar has gotten out of utility scale solar building, and they're just building, they're just a panel manufacturer now, but because they're United States based, they're getting protected in the market because of the tariffs. So at least in the short run, they look pretty good. Enphase, I nibbled on last week, I told you, and I think that you can buy it again today. We'll get to that in just a second. Sunrun, one of my clients pointed out that Costco doesn't fool around with bad companies, and Sunrun is what you find in Costco. So I would think that Costco and Sunrun are going to drive solar implementation across the country, particularly in California to start. But Sunrun is a real play here. And I think that that is one that you add to your basket. If you're not going to buy the ETF and you want to buy your own basket of companies, I think Sunrun is one of them. I don't think the yield companies are. So, they had this pop up here. I'd be selling the RIP. And I think you really do have to trade these a little bit more than you think. Anytime that there's a RIP, price sell it, then buy it back. I don't know if there's much of a call market on these for selling covered calls. And I would warn you, right? That chart looks pretty good. Oops. See, that was the hype. People didn't understand what these were. Chasing that yield, new energy. Exciting. I'm going to get growth and a huge dividend. It's magical. Oh, where did the magic go? Down 50%. So these really should just chop around like this. Solar Edge. Think of Enphase and Solar Edge very simply like this. Solar Edge has wires, Enphase doesn't. And Solar Edge had a couple of fire problems. They're still huge, and they work on different types of projects. So on smaller projects, Enphase is the clear winner because you just snap together the panels and the energy transfers. Solar Edge is for wiring bigger projects. This stock has come back. I've had a hard time figuring out where it belongs. I don't think I would buy it unless it got into the lower 60s. You can try to figure out if this is some sort of good news, but I could just as easily see it going dunk, dunk, dunk. So Solar Edge, I won't buy until it's in the lower 60s. I have exposure to it through TAN. Enphase, on the other hand, right, filled these gaps, and we're starting to buy it. So on these pullback days, I think you can buy it. I have a hard time believing this level is going to be breached. Not that it can't. Get all the way back down here, down to 10ish and 12ish if things go wrong. But if you take a look at their press releases and you take a look at what they're doing, they just keep adding the best of the best for companies to work with. So take a look at Enphase. I think you probably should accumulate it on the pullbacks. Keep a little dry powder in case it does one of those solar plunges, right? But I think that's worthwhile. First Solar, again, protected. I really didn't want to have to buy it. I really did not want to buy it unless it got into the middle 40s. My exposure is through TAN, so I don't own First Solar. I own Enphase, do not own Solar Edge. And the reason I want some exposure through TAN, it's hard to keep track of this many companies. And I know the industry is going to do well. So I have TAN plus Enphase plus SunPower. And, you know, I've bought SunPower here, and I'm buying it again here. The latest news with SunPower, right, that they're splitting the company up, is that Maxeon is going to be the panel manufacturer, primarily out of the country. It'll be international. But they are still building some in Portland for SunPower, and SunPower isn't going to have to worry about tariffs. Them getting into bed with the contractors, I think it's a limited universe, a limited number of competitors they're going to have for servicing contractors. So I think that SunPower probably does very well. Now, some contractors are going to hook up with Tesla, right? Because Tesla made the announcement recently that they are not going to have exclusive relationships, right? They're going to work with contractors. They're not going to build out their own network. So that's interesting. So the contractor model, working with contractors like Home Depot, is the way to go. And I think SunPower is going to eventually get into Home Depot and or Lowe's, and that's how they're going to distribute. They could even cut a deal with GM or Ford. So there's a lot of ways for SunPower to get into the market and penetrate even deeper. They're at the very, very early stages. They put out a nice report, Complete Guide to 7 Renewable Energy Resources. One of the things that SunPower is doing is the management of energy. So I think that's going to be a big business. Sunrun, I think they're going to be a leader in residential. They already are. Vivint is out there. I don't remember the symbol for Vivint. VSLR. Right, Vivint is in here somewhere. Down there. My exposure to Vivint is through the TAN ETF. Tradable stock. We have a contractor in our group. So a solar contractor in our group. So he's made a couple comments before. I think he's pretty big into Enphase for sure. And maybe SunPower, I don't remember. So these are the companies that I think you want to start looking at. First Solar and Solar Edge you keep track of because they're big holdings in TAN. If they would plunge as part of a more correlated correction, I think you can get into them. I prefer First Solar. I think First Solar is the one that I'm looking to get into because I think that they're going to have a very good run in the domestic market. But Enphase and SunPower are my favorites. The recent split of SunPower also comes with another injection of capital from Total. So people who talk about SunPower's balance sheet, like I said a year and a half, 2 years ago, they don't understand what they're talking about. They're looking at a couple numbers and they're not studying the company. So just as we started off the conversation today talking about some industry magazines and publications, you know, you have to read the corporate documents too and understand what the relationships are. SunPower has a unique relationship. They're majority owned by Total. And with the split off that was going to drop, and Total said, no, we're going to infuse money into the company to keep our 50% stake. So, all right, let's take a look at a couple of questions and then call it a long weekend. Somebody asked about limited options in a 401k. So in general, you know, you just want to be in the growth stocks options that they have, and then tweak your asset allocation from time to time. That's all you can really do if you have one of those 401ks that have 14 options and 7 of them are similar. We do have the 401k alert service, so contact me and we can talk about it. Any thoughts on Heliogen, Bill Gates' energy company? So people have to understand what that is. It's not some change the world quickly sort of thing. What they're looking to do is cut the carbon output of big industries, cement, in industrial companies. And they think they can cut about emissions by about half. I think that's going to be a big deal. I think it's going to take a very long time, but it'll happen. And now that the proof of concept is there, there's going to be copycats. So we'll see how that goes. But yeah, will it change the world? Yeah, to an extent, for sure. TAN plus a basket of solar stocks for what percentage of a portfolio? Again, you have to decide, compared to the index, how much you want in there. Back when I thought energy was going to boom, I went to 4 times the weight of the index. So from about 6 and change % in the index to a quarter of our money, and of course that got waxed. So you have to decide how much risk you want to take. I think that TAN would be your core holding. I know that you're looking to build money for future generations, for inheritance. So I think you have a little Enphase, a couple percent of SunPower, and several percent of TAN. I think you get up to 10, 12%, maybe make it a double weight in energy there, with the idea that you're going to phase out your fossil fuel investments. But if you want to take more risk, add more. If you don't want to take more risk, don't add more. So it really comes down to risk management. And remember, if you are in line with the index, you have a correlation of 1 or a beta of 1. You're just taking market risk. I argue that a lot of times beta is good for the portfolio, because if you're getting positive beta, right, you're making more money. And that's the whole concept that I've used is, okay, what can I find that's high beta that's going to go in the direction I want versus the other way. So, I think 6 to 12% in solar, build it over a period of time, because, clearly it could drop 20, 30% at any time. Build it over a period of time throughout a cycle, and get to the range that you want to be in, and then ebb and flow trade it from there, especially the ETF. The ETFs are easy to trade. All right, we're going to call it a day. Have a great weekend. Check out your email and